So thank you for joining us. I'm David Bushby. I'm the CEO of the Commercial and Asset Finance Brokers Association of Australia, CAFBA. And we have been working with Michael Moon on our professional development days now for multiple years, and found that our members who have experienced his sessions have found them very, very valuable. The reality is that tax debt impacts many of our members' clients. Tax debt itself is a problem that needs financing, but also the existence of tax debt often impacts on brokers' abilities to get the best deal for their clients when the time comes.
In the past, the ATO acting randomly, but now is anything ad hoc with the ATO in your opinion? Matthew, awesome question, mate. What a lot of people, and we often see this where people say, oh, it depends who you get on the phone, yada, yada. I think those days are 100% gone. We are seeing that the ATO have spent a lot of time, and I think they had a bit of time on their hands during COVID. They have invested heavily in tech, in AI. One of the things that we talk about is some of those things that the ATO are doing in terms of their recovery activity. A lot of that's driven by AI now. Credit reporting, definitely. They say DPN's no, but I'm not sure. I think that it is. But so there's a lot of that. But also I mentioned before about data matching. Yes, they are very heavily checking things. Some of the questions we're getting back on our applications we've never had before, and it's all data. They've sort of got world standard data matching now, and we had a client recently whereby we put in an application to remove some of the interest for them, and the ATO came back and said, yeah, but some of this interest goes back, I think it was say 5 years. 3 years ago, they bought 2 high-end Range Rovers for the business. That cost was roughly how much the debt was at that time. Why did they buy those, and why did they need, I can't remember now, the $300,000 or $400,000 Range Rovers for, I think it was a painting business? Fair question, which we had to address and we got over the line, but fair question. But the point around this is the ATO are looking that level of detail in that, and that does take a lot of the randomness out of it, particularly in that space around the interest. Some of you will be aware that there's been a lot of criticism of the ATO around how they've assessed these applications for the removal of the interest. It's called an application for the remission of interest and penalties. The Ombudsman got involved last year and did a whole review of this and issued a report about 2 months ago now. One of the things that changed, and they changed the whole, actually, sorry, it was longer now. We're almost in June. It was before Christmas. They changed the whole process in January this year around that. And one of the things they changed is a centralised section that is assessing all these applications to get consistency. So the randomness, I think, is going way out of the system, which means it's then far more important. You don't get lucky anymore. You don't get on the phone and go, get somebody lucky. You've got to do the applications right first time or it's a no.
And just on the remission of interest and penalties, you mentioned grounds. An example of what might be grounds?
Yeah, look, really good question. Broadly, the test is I'll go through what the test is and then we'll sort of link it into the grounds. Basically, the reason the ATO impose interest is you've got business A and business B. Business A paid their tax on time, business B didn't. So they want to create a level playing field between them, and the way they do it is to charge interest at a not so friendly rate. So what they have to say, is it fair and reasonable for the business that didn't pay the tax to get a leg up from the other one because they did pay the tax because they've had access to the money? The broad test they look at is, how did the circumstances occur? And there's a legal practice statement, and I'll come back to that. What have you done to effectively limit the impact? And why won't it happen again? And what they really look for is things that are outside your control. If it's within your control and you've done nothing to adjust to it, then they go too bad. So there's the obvious things like it used to be COVID. Now, if you use COVID as a ground, you get an automatic no. But there's other ways to dress it up without using the word COVID. But what they're looking at is what are things that have happened in the business. The obvious ones are if you ever had the ATO talk about fires, floods, natural disasters. medical issues with key people within the ATO. You know, we had one recently, and they had, in fact, I think it might even be in the case studies where, you know, they had a family issue with a child, and it was a family business, a food franchise, and they took their eye off the ball with the business, with the ATO and everything. But they had a child that was in ICU for many, many months. The ATO will look at things like that. So what's interesting is now they're not interested in, you know, we used to be able to say to them, if you had a client that just paid you late, you know, you're working for BHP, not that I'm picking on BHP, but you're working for a big provider and they're paying me late. That's no longer a ground. Or we had a business that just, you know, construction company, we had a fight, they didn't pay us. That is a factor, but it's not enough on its own, because they're saying that's part of normal business risks. That's why you've really got to be very careful about how you position this with the ATO. No different to what you guys are doing when you're positioning to deal with a lender, but you really need to, as I said, position it in a way that the ATO are able to get to a yes and say yes, we agree to exercise that discretion.